everybody. Good morning. It is Tuesday, June 3rd, 2025. I'm Katie Perry here with Shay Boloor. As always, Shay, how are you doing this morning?
Doing well. It's a quiet morning.
I
I'm seeing
know.
the markets like not budging much. There's been no pre-market noise, so
It feels
yeah,
chill. I don't want to, like, last time that happened, I feel like there was like a tweet in the middle of the show that just like went
ruined
off.
everything.
But yeah, I feel we were talking about yesterday how much volatility is when like the headline is like Campbell's earnings. It's like, all right, I can roll with this, I guess. We do have some exciting things happening this week on the earnings front, specifically CrowdStrike. And if you guys are regular viewers of this show, which you should be, we talk about cybersecurity a lot because, as Shai likes to point out, it's really just going to be the underpinning of basically all tech as we move forward as a cost of doing business. And we got CrowdStrike reporting today. We talked about them a little bit yesterday, but Shai, wanna see how you're feeling this morning ahead of their earnings. They report after market close. What do you think's going to go well for them today, and what do you think might not go so well for them today, if anything?
If anything, I mean, okay, so CrowdStrike already pre-announced in a way, so it's going to be a somewhat not surprising print, and that's I think it's really important to highlight that it's going to be in line. They recalled out a couple weeks ago that's going to be, but my eyes are immediately will go to net new ARR growth because that was deaccelerating last quarter, and I think it's expected to fall 13% year over year on top of a really rough back half of the fiscal year. But I want to highlight that's not a crisis because it's more of a transition that CrowdStrike's kind of going through because the moment isn't cyclical, it's more architectural where CrowdStrike has the infrastructure, the demand signals, and the product breadth because they already have a product suite of 9+ modules through Flex that's already at a $3 billion run rate. So they're already embedding themselves into something that's much deeper across all the enterprise's suites. And it's not just logo acquisition anymore, it's usage density. And again, in agentic AI world, the future is all usage based, not seat based or logo based. So I do believe that what we're going to get this earnings cycle is that it's things are humming essentially. The margin structure is going to be in line. They just announced 5% layoffs. I think that if CrowdStrike starts to map their Charlottes into this revenue stack, I do think the narrative starts shifting from point solution fatigue, again, the net NRR growth that I was just calling out earlier, the defeat fatigue on that, to a platform primacy. And I think that shift implicates far beyond just this earnings print. It's going to reframe the entire market's narrative that CrowdStrike is becoming the all-in-one cybersecurity platform for enterprise AI, and their AI native security stack will be bought, deployed, and built on a usage basis. And that's something that's has a ton of runway for the future agentic AI world we're about to enter right now.
Yeah, I'm curious, Shai, when you talk about ARR, the recurring revenue, do they share out where that's sort of coming from? Is it, to your point, it's on a consumption basis? Is it current customers expending more with them, or is it like net new logos added? Because within enterprise, I mean, there's limited TAM there. Do they share sort of where that's coming from, or do you expect them to share that?
I do expect them to start sharing more visibility into what's under the hood because again, 9+ module adoption. That's essentially it's a lot of
Shai,
different products.
what is that? What's 9+ module adoption?
Like endpoint security, they're the king of endpoint security. So
Okay.
that's one module. The other one is identity. They're getting to identity. That's a second module. So every single product is a different module. So
Okay.
when I say that like Palo Alto is an elite company, but they have to acquire themselves to maintain that status, they have to essentially they have not proven the ability to organically create their own modules. They've had to acquire externally to sell that platformization narrative. Where CrowdStrike, they can organically grow the within the umbrella of CrowdStrike. They don't have to go outside and acquire. And because of like f- uh, their flex part of their business, it's called I know it's kind of an adjective, but it's called flex. where it's like their subscription framework that unbundles their module adoption from procurement cycles to actually hitting once the platform scales. Like that alone is at a $3 billion run rate. So like that's happening. And the customers on Flex are now average over 9 modules. So that's showing like
Wow.
everyone's getting involved in CrowdStrike because of endpoints. But once they're in their ecosystem, they adopt so many different products under CrowdStrike's umbrella. The 9+ modules is just the average. That's why I think they're just trending towards becoming that all-in-one cybersecurity platform for enterprise AI, because just a year ago, it was 7 modules. Now it's 9. It's going to continue embedding itself deeper across all the enterprise's operating systems. And the beauty of the Flex is like the more modules that they average, it's more usage based now instead of just like specifically one product. So I do think that you're going to see the ARR deceleration, but it's not contraction. It's just, I think it's more of a lag between architecture and monetization from that 9+ modules. And that's where Charlotte comes in, which again, it's their AI wrapper. And that's, we won't get into that too much, but it's the automated agent framework. And I think it's just, they're just doing so many things well, but they're also pricey, guys. Like they're trading at 25 times sales,
Wow.
140 times earnings, and they are anchored on any upward surprise due to the outage that was just 10 months ago. So I don't expect fireworks, but if people love the module adoption and the under the hood metrics, and maybe the ARR isn't deaccelerating as much as anticipated, the 13% decline year over year, it might catch a bid.
This is interesting to me. This sounds so obvious, Shy, but I'm not like living in the same world you are. I feel like sometimes just deep into these topics, but I had literally never thought about cybersecurity solutions as having different modules. Like in my mind, I'm just like, oh, it's like a fence around anything. But really, it's like if you have a house, you might have a fence, you might have window locks, you might have a door lock, and every business seemingly has a different combination of modules it would need. I had never thought of it that way. Like it's just, I don't know. You just think, oh, cybersecurity. I think of like, I don't know, like some sort of iron dome around the tech. But yeah, identity is very different in terms of the security solution than something else.
W- Well, I mean, I think that's the beauty of, first off, a lot of the software companies don't have this many modules.
Yeah.
It's just like when you're elite and you have a moat, you have over 9 modules on average that your customers use on Flex. But the reason this is so important as well, because in SaaS, like I know Katie, you're aware of this, the it's not the initial land that defends the business, it's the expansion once someone adopts a product. That's like how you have that margin expansion opportunity in SaaS. So each additional module isn't just added revenue, it's in a way an anchor because it creates higher switching costs. And one of my favorite moats is a networking effect. And when I find a networking effect moat within a company, and CrowdStrike has that, that makes me believe that they're going to always have a premium valuation for the market, because there has to be some kind of competing product out there that results in customers leaving this ecosystem for that one and takes months to migrate yourself out of this data system to another one. That rarely happens, and that becomes a defensible moat, and that gives that company leverage. So in cybersecurity, for example, like when the operational continuity is mission critical, like cybersecurity, replacing one module often means replacing the whole stack, and that's what gives CrowdStrike specifically leverage. And more modules per customers means higher long-term value LTV. It also means a more gross retention rate, which everyone loves in SaaS. It also means lower costs of acquisition, CAC, over time. And that's also a very important metric that a lot of C-suite use. So I think that having these customers use 9+ modules in CrowdStrike, I think it turns them into just a simple cybersecurity vendor, into that infrastructure layer that I constantly talk about. I love having in my companies that I hold. That's hard to rip out, easy to grow into, and it's just going to become embedded into every enterprise's core security architecture. That's really just getting started. That theme is so a huge runway.
I'm so glad you brought up switching costs because I feel like that's like my favorite mode. It's like when the pain of moving away, like something else has to be so much better that the pain of moving away is worth it. And that in like an enterprise software, like that is real. Like you would have to have such a better, like even if you were like slightly better, like I don't know, you have to be so much better. It's such an incredible, if you're in that position as a company, like as long as you don't get lazy, you're sort of cooking with gas. And I feel like that's one of my favorite moats to look at. Like where is it like such a pain in the ass to switch that people don't?
I mean, definitely cybersecurity. Also data like Snowflake. It
Yeah.
takes a year and a half to migrate your data out of their
Oh my
warehouse.
god.
You won't do it. No CTO will risk essentially having lagging on innovation because you're switching vendors from, I don't know, Snowflake to Databricks. Like it just, you don't do that. But it also, like the switching costs that you just mentioned it there, and I called out, like that's how you build pricing power. Like that's essentially where you can consistently raise prices, cross sell new tools, and still retain customers. And for Snowflake, for example, I think their net retention rate is like 125%. So like that tells me, sorry, net expansion, their expansion rate's 125%. That tells me that even if they don't acquire any more customers, they're going to be growing their revenue 25% because their existing customers are spending 25% more than they were the previous year. That's incredible because they're obviously going to get more logos and more customers into their ecosystem. And that's how you can predict their future CAGR going forward. And again, like pricing power is huge, and that's what justifies paying 25 times sales for CrowdStrike. And I don't know what's Sentinel One. Let me see Sentinel Ones. I don't mean to pick on Sentinel One because it's like the unloved cousin a bit. They're trading at 5 times price of sales.
Wow.
That's the difference because
You said CrowdStrike is 25?
25.
Wow.
So knowing, like everyone knows cybersecurity is the one of the themes you need to own next 5+ years, probably decade long. When you want to own a theme, you clearly want to own the winners, the early adopters. For example, when cloud was just like killing it in the game in the 2000, in the early 2000s, like you invest in the cloud vendors, the big hyperscalers, Google, Amazon, and Microsoft. If you did, you did really well. But if you found the niches of like, oh, they're going to benefit from cloud, like this name has like is much cheaper, that maybe there's an avenue for them to like really find a niche. I don't think you did as well as you owning the Microsofts, Googles, and
Yeah.
Amazons. That's why it's so important to own the winners in early sector growth themes, because the market itself in that space will grow drastically and aggressively, and it's just going to high tide raises all boats, especially for the ones who have the biggest moat in that theme. That if that market TAM is 30%, I can promise you that these market winners are going to outperform that TAM
Right.
growth. So it's really important. I think pricing power is everything in a mo.
Yeah, a couple of quick follow-ups on, okay, so the modules that CrowdStrike has seem like the most expansive out of a lot of the cybersecurity players, perhaps all of them. Who kind of comes next? Like, does anyone have four? Like that you know of? Like, or is CrowdStrike so far and away the leader, and all these other ones are almost more like point solutions?
So I think CrowdStrike offers, so it's tricky because CrowdStrike's platform Falcon, like it's one of the first AI native cybersecurity platforms out there. So because Palo Alto was an AI native, that they had a different modular approach than what CrowdStrike had, which was constantly land and expand because they started from AI.
Yeah.
And their ability to, like, again, you guys all know AI can just constantly innovate very quickly. But I do think like others, like Palo Alto has three core platforms.
Mm-hmm.
Again, it's their Cortex, their Strata, and their Prisma Cloud. I think it's
All these
um
names.
yeah, it's those names. Like they
Like
definitely
I
have
was
three.
writing down CrowdStrike. So there's Flex, which is the platform.
Yeah, Flex is the platform, but they have 9 different
And
modules
then
within
Falcon is
Flex.
AI. What was there was like a name. It was like Stephanie or something. It's not Stephanie.
Charlotte.
Charlotte.
Yeah, Charlotte. But
That would be hilarious if it was Stephanie. I'm waiting for someone to name like an AI product, something like Gretchen. Like that would be hilarious. Okay, so
well,
how's Stephanie different? No, sorry. How is Charlotte different than Falcon?
Okay, so Charlotte's their autonomous AI assistant for security analysts. So like
Okay.
first off, it's very, very early in the AI monetization. I think actually that's one of the things where I will love it if they start calling out the monetization on Charlotte because they still haven't done that yet because it's
Mm,
still so early. And I think it's really important when you think about Charlotte, it's not just some typical AI agent wrapper. It's not just then generating a dashboard. Insights or some chat based summaries that a lot of these Copilot companies who say AI agents do. It's really an autonomous agent framework that reasons, investigates, and like response inside the production environment. So like that's really important because it's directly correlated with decisions, not just prompts, and their actual agents. So like that alone should command its own revenue line, in my opinion, because AI agents are just getting started. But as of right now, we have no visibility in what the monetization on Charlotte. But maybe that changes because again, CrowdStrike pre-announced a couple weeks ago. So like, what's there are going to be some new variable information today on their earnings report. It could be the improving the access of what's happening under the hood, and Charlotte would be a great one. And I think that if CrowdStrike starts to map Charlotte into his revenue stack, the narrative will shift. It's going to go from, again, I mentioned it earlier on this meeting in this call, like it's going to go towards a platform primacy because this implies that the monetization on their AI agents is just getting started on their usage. And that's going to be really exciting because everyone still views CrowdStrike as a logo based company. It's like kind of a licensing business model. If Charlotte starts ramping up, and you see they want to start calling that out, I think that provides the monetization clarity that a lot of people are hoping for.
yeah. All these AI
Mhm.
agents, I'm waiting for them to start giving them dude names like Chad or like, I don't know, freaking Joe. That would be great. Uh, I guess that's not as exciting as Charlotte sounds very like British and proper
I
and
mean, Sentinel One has singularity. I feel like that's a little masculine.
singular. Oh, that is. Whoa. Okay. I don't know about that. That doesn't sound very friendly or helpful. Let's pop over to Snow because there was a bit of news that came out with them. They had an acquisition. They bought Crunchy Data to power next gen. Am I saying this right? Postgres for the AI era. So what I'm reading here is, and this was interesting. I was diving into this because we were talking about MongoDB yesterday, and you were saying they're they're not SQL. These guys are SQL based, and I'm like, well, what's the difference? So it sounds like crunchy data players like this um, use them when the data is structured and like the relationships between things matter, like a spreadsheet. It's kind of clean. There's columns, and then NoSQL, which is I think what MongoDB is when it's like messier or constantly changing. So two different types of databases because I was curious if they competed with MongoDB and they don't directly. But Shy, like you follow Snowflake. Was this an expected move that you thought would come eventually, or what did you make of this announcement?
I did think it would come eventually because I'm looking at what Databricks acquired. Databricks acquired a Crunchy Data competitor
Okay.
for $1 billion. And again, like it's really important to go back historically on tech revolutions, see like how the disruptors initially played that phase. Like Salesforce, for example, like CRMs. I don't think anyone realized CRMs would be as big as they were when the era got started. And Salesforce, in order to sell their platformization angle, all they did was acquire BI tools, constant BI tools, and they were able to sell this platformization narrative. Same thing is happening on Snowflake and Databricks because data is a commodity. It's becoming more and more of a commodity. So if you're a data warehouse company or a data lake company, you're at risk of just becoming a commodity unless you can sell yourself as that platform. And Salesforce was the same thing back then because just data is a commodity back then for cloud. Like you have to sell yourself as a platform. So I think you saw Databricks acquire a Crunchy Data competitor. I'm blanking on the name. I want to say it's Neon, but I think I'm wrong on that. For $1 billion. This was for $200 million. I didn't love the acquisition. It's a 10 times sales multiple. To be honest, like it's not much of an ad value. The people I've talked to in the space, like they think Crunchy Data and the competitor that Databricks acquired is just like they're fine. They're just essentially open source databases that developers love, but it's just
Is it
the
this
hyperscaler.
Bridge company, Shy? Or is that a
No,
different one?
let me see.
Databricks has been
Oh,
acquiring.
Databricks. Yes, that's the
Databricks but is it Ridge that they acquired? You're thinking of a
no.
different one.
Let me see.
Oh wait, this might be it. Neon, you're right. It's Neon.
Yeah. Oh, it was Neon.
Yeah.
Nice. So again, like why are Databricks and Snowflake acquiring these companies? And these database companies. Again, one of my thesis on this agentic AI world about to enter, data's gonna explode. So AI apps today aren't just gonna need big data storage that a data warehouse company or data lake company can provide. They're gonna need that fast, flexible, unstructured, developer-friendly database to build apps on top of that data. So Crunchy Data for pros. I butcher the names as well. It's Postgres. I just say
It's called
Crunchy.
Wait, the G's silent? Wait,
I,
Postgres.
Yeah, Postgres. Yeah, sorry, Postgres.
That is not at all phonetic. But I'm glad you told me because I would have been like, "Hey guys, today I talked about Postgres." The hell?
No,
You guys don't know either in the chat though. I see you laughing. You don't know either.
But these databases, like these developer-friendly databases, like vector search is everything in this future in the AI we're about to enter. So like it's like maybe that's Snowflake's way of getting that exposure to vector search, so they can start becoming the place where developers build AI-powered apps. Because again, as when I say SMBs are going to explode from AI agents, I really mean applications. Like they're not going to be brick and mortar companies. They're going to be AI powered apps are going to explode because it's not going to be that hard to develop them or that costly, for example. So, and to go to your point on MongoDB, like a lot of people think like, oh, popular database company out there. What's that MongoDB? Especially when it's a developer friendly database where like their whole spiel is unstructured, flexible, easy to use. But I think it's really important to know that like, the MongoDB's main strength. Again, they're reporting this week. We'll see, and they're also in the doghouse. Like they haven't proven to me this yet, but it's supposed to be like an easy way to store messy, unstructured data. Like when I say unstructured data, what do I mean by that? It's like those chat messages, social posts, user profiles, like those kind of data points that aren't just like an Excel sheet. So I think that po- um Crunchy data acquisition is going to help Snowflake kind of catch up in that lane into that developer friendly AI ready platform lane, but that plugs directly into the data cloud. So I do think there is somewhat correlation, but it's I don't know, like Snowflake buying Crunchy data is like Apple buying the best Android developer tools, and they don't want to kill the Android, but because they want to make sure developers build cool stuff inside their ecosystem too, MongoDB could have a serious rival trying to win over the same group of AI developers. But again, it's like Apple and Android is like it's it's different. It's like Apple buying it's like different but same. Like it's kind of weird,
They're like
but
next to each other.
yeah, they're adjacent but not competing, I guess.
Okay, interesting. Yeah, it's even like the cybersecurity conversation, thinking about, yeah, of course the data that comes into different types of companies is so different. If it's like a financial company, those are very structured transactions
Mhm.
versus Reddit, or you're scraping the internet, social posts, fascinating stuff. So we'll keep our eyes on Snowflake as we always do. Let's move to Meta real quick because they had a big announcement this morning on the energy front. So they struck a 20-year deal with Constellation Energy. Uh, and basically, this is going to purchase a lot of nuclear power from Constellation starting in 2027. And so the power is going to feed into the regional grid, not directly into Meta facilities, but it is going to count towards Meta's 100% clean energy goals. I think this is, again, another headline. Big tech is really getting serious about clean, reliable energy that is going to be needed to fuel AI. And increasingly, that is looking like nuclear. Constellation, CEG, their shares jumped 15%. So investors were pretty pumped about that. Obviously, those are some long-term contracts that investors love. We touched on nuclear a bit, Shy. Like, how bullish are you on? I mean, it's like the energy demands. Where does that even end with the acceleration of AI? And is nuclear really the only viable solution for that?
Only viable solution, and I'm hyper bullish on nuclear. That's probably one of my bigger misses past couple years. I just didn't feel the urgency to get that exposure. I think that's going to change if we do get some kind of pullback in the market. I do have a couple of names that I still need to research more into because it's like a brand new language. I didn't really know much about nuclear a couple years ago, and now it takes a while to really for me to build a conviction of the theme as a thematic investor. But for like this act was the Meta signed this 20-year deal for the 1.1 gigawatts. That's huge. Like I don't think people realize like how big 1.1 gigawatts is. It's an entire grid for like a mid-sized city. So think about it like
Wow.
a million homes essentially. It's enough power to power a million homes. Or in Meta's case, like clearly the next gen data center campus dedicated to the inference demand explosion we're going to see in the LLM training and like all the real time services that the metaverse and agentic search is going to have. So like they're preparing for the constraint that we're about to experience because again, training and running these AI models, like these real time agents and LLMs are aggressively becoming a commodity. It requires massive compute, yeah, but even more massive energy. And I think that a lot of hyperscalers are, if not already, are going to start experience serious power limits, especially in key regions. And I think that the reason nuclear is so important because unlike solar and wind, nuclear can always turn on. It doesn't fluctuate with the weather. That's why I'm not as bullish. I actually am not bullish at all on solar and wind. I think it's the awkward gray area of like the energy angle of like what the future is going to be, where it's just like, all right, it's a good band-aid, but it's not going to fix the stitch. And I don't want to invest in band-aids. So nuclear is the only solution for AI to hit their max potential, and I think it's the only zero carbon, like green energy source that can scale to meet the 24/7 demand on GPU clusters. And this isn't just like, oh, Amazon, Meta's just doing this for publicity and PR stint. Like, no, it's because AI needs uptime and the inference demand explosion that literally hasn't just started yet. But you just saw Nvidia see their networking revenue beat by 40 to 50% just last week. It's happening, and
Yeah.
slowly but surely, it's going to continue, and it's going to hit an energy constraint issue. And again, the deal starts in 2027. Like that's a 2-year lead time for Meta. And I do think that this is Meta forecasting the demand curve is going to be substantially higher than what the market can fully price them in. And that's why I think that nuclear is, I think you need exposure in nuclear, but the urge, I still think there's going to be some red tape bureaucracy on how quickly they can really scale. And
Hmm.
I'm waiting to see how that plays out. But this is a big win for CEG, especially when Meta is going to be one of the bigger winners in the agentic AI future. And at 1.1 gigawatts is a fat grid. That
20
it,
years is a long time. It's
yeah.
like, uh, yeah, I think definitely a big swing. It's interesting with the nuclear stuff. Even when I was reading the press release, they mentioned like clean energy goals and stuff, and I'm like, I feel like that narrative is so secondary to just like we need energy and it has to be nuclear, versus 5 years ago. There's our opening bell. You know what I mean? Like, yes, nuclear is clean energy, but that's not what people really care about. This needs to be the power source. But as you were talking, Shy, my brain was going to, we were just talking about cybersecurity. And then do you think of these two things as like growing together? Because I assume all these nuclear power stations are going to need crazy cybersecurity. And then I'm thinking like what module serves these guys? Who builds that? Because if more and more of these are popping up, that is going to be a prime target for for an attack, right?
Yeah. I mean, first off, for sure, I think that's cybersecurity will matter more than ever just for the example you just mentioned, where I always get questions of like, how does CrowdStrike create all these different modules? Like, how do they know? It's because the time technology is moving so quickly, and things are going to consistently become the latest and greatest, and you have to protect yourself from that latest and greatest. So, like, hackers, nation states, like cyber criminals groups know that disrupting AI's workloads at scale equals paralyzing entire business units. That's the new war field. It's not something you can see, it's intangible because you can these hyperscaler data centers can turn into national security assets. Like that's what's going to become. And
Mhm.
when compute is the new war currency, how do you what do you attack during war? Like the bread and butter, like the thing that makes the world move, and that's compute and that's AI. So I think that for sure cybersecurity is going to be even more critical in this nuclear world about to enter. And I think that Meta's move into like this nuclear um, AI intensive infrastructure, like this massive deal, like it raises the stakes dramatically because like protecting the next gen stack isn't about firewalls. It's about like autonomous, always on cyber defense for an always on energy future about to enter, like nuclear, that you're always gonna have to be protected. So like I do think these plants are gonna have to get protected by cybersecurity. It's a must. Imagine if Chernobyl, like especially with how much we're
Yeah.
domestically accelerating the plants in US, I can't imagine a Chernobyl like situation in the
No.
United States. So
And talk
it's going to
about
be a
pricing
must.
power. It's
Yeah.
like to me, it's like, like what vet bills. It's like there is no amount people wouldn't pay for their
Yeah.
pet. You can really crank those rates up. Sticking on Meta for a moment, a different facet of their business. They also made an announcement around their advertising platform. And so they announced that this is going to be very much automated by 2026. I've worked in marketing a while. It used to be very, self-serve. You go in, you had to do a lot of the research yourself. You had to, write the ads yourself. You had to develop the creative. And it was mostly just sort of like that was a system where you were uploading and optimizing and transacting dollars. Over time, all of these platforms, Google included, there's more AI features. So, for example, in Google now, I used to have to go and look line by line, and now it'll just say, "Hey, this keyword's not performing. Do you want to like turn the budget down?" I'm like, "Yes." It's just like, do it, do it, do it. And so that's what's happening at Meta. This is a big deal for the advertising industry, I think, for a couple of reasons. One, obviously, ad agencies and there's some holding companies, Omnicom, IPG, that they hold a bunch of these agencies that get media. They manage media for brands and they get paid a commission of that media. I think this is kind of intermediating that layer. And it's already happening. Like you used to need an agency to help run your Google campaigns. Me, I understand the basics of paid advertising on Google. I can do it myself now because it's like a co-pilot. And so I think that's something to watch just for the advertising industry and also players like ad tech. So Trade Desk, LiveRamp, um, they're also at risk there as sort of they beef up the product and it's able to sort of do more on its own. Um, so that's going to be interesting to see, but that's something I even picked up in my day to day where you less so need someone to manage these things. If you understand your goals and your budget, it will optimize it for you. Like Google's nuts now. You just upload a ton of stuff basically, words, copy, creative. You throw it in, it runs, it optimizes, and it tells you within a couple days which is top performing. It automatically moves the budget. Like back in the day, we were like watching this stuff hourly. So it's wild to think about, and these platforms are kind of taking more business away from some of these intermediaries. But as you point out, Chai, like the advertising maybe won't be as dominant on these platforms in the future, but they're finding ways to extract more value from that process through using AI. So I thought that was an interesting one. Um, and but yeah, Meta is making some moves. It's so funny. I'm like checking in on the markets right now, and I'm like, oh, there's like lots of breaking news things happening. But like, there's a top story on CNBC right now. Stephen Curry says he suffers from imposter syndrome. Why? Like, that's why I love CNBC because it'll be like the market's down 1,000 points, like, like hold on to your 401ks. And then they're like, oh, like the greatest basketball player ever thinks he sucks sometimes, by the way. Uh, I don't know. Anyway, back to brass tacks. The other headline I was just looking at though had to do with, let me pull it back up. Shoot, where'd it go? Da, 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 da. Oh, Hims and Hers. This was another one you talked about maybe missing, Shy. They made an acquisition to acquire a European telehealth platform. So those guys are going global. They're hitting the gas on the momentum. Any chance telehealth Hims becomes one of your core thematics in the fourth industrial revolution, Shy?
I'm not bullish in telehealth as
Shoot.
a thematic. I just think it's a hyper commodity of a business. Like there's so much noise for me. So like when I don't, or I feel like I've been wrong on that theme. Like clearly Hims is hitting $60, like it's doing well, and I think that whole space is a commodity. So like the bigger whales like the Google, Amazon, and Google's will just do well. And I maybe it's just one of those lanes I just don't get, but I think it's okay for that. Like, for example, like we were just talking about Meta, like that Meta ad news is substantial. Like I think I was surprised not to see certain ad tech names dip from that, like Trade Desk, because the future of ads can drastically change what they are today. Like you mentioned the agencies, but like really, it's part of the theme I'm saying where SMBs or applications are going to explode because now I can have a whole ad agency under my belt with just this AI tool. And it's
Yeah.
going to be input product photo and budget, and the output will be sales, views, installs, and autopilot essentially. And I think
Yeah.
that Meta is in a place now to own the full funnel, and that's really interesting where it can like write the ad copy, it can select the audience, it can like design the visuals. Like, by spoiler alert, consumers are screwed. They're always going to be sold now. Very
Oh
hyper
yeah.
specific too,
Yeah.
so it's tricky. But like, I'm a little worried about the Trade Desk. I am like, this is one of those names I constantly go back and forth with because I don't know if I want the standalone ad tech exposure in my portfolio. I really don't. I Because like I can get it through exposure through Amazon. Amazon is killing on their ad side of the business. Mercado
Mhm.
Libre is just getting started. Like ad tech could get disrupted in this agentic AI we're about to enter because why why do agencies have to use the trade desk tools to really like when Meta can just give you the results in their AI. That's like what I'm worried about, where Meta can automatically create the ad, optimize the target, and buy and scale the performance. And then a lot of the as small mid-sized advertisers don't have to use demand side platform at all. So like why learn how to use all the trade desk tools when Meta can just automatically give you the solution. So like
Yeah.
I do think that it does, if this is the way that the ad tech world is trending towards, I do think it creates uh it compresses the ad supply chain, which obviously consolidates a lot of the pure plays outside the wall gardens, and it keeps a lot of the spend in the closed ecosystem, which is what I mean by wall gardens,
Hmm.
and erodes the need for any kind of external solutions, demand side or supply side. So I don't think Trade Desk is dead. Clearly, I own it still. It's less than 3% position, but I still own it. But I do think there's a world where if this starts accelerating this kind of move, like they're gonna have to start playing defense again.
Yeah.
And AI powered wall gardens versus manual multi-platform orchestration, which is what Trade Desk is. Like that's a tricky comparison. Like obviously the AI powered wall garden is the way to go. And
Yeah.
Meta's bet is that advertisers are going to choose that. So like it's something I'm monitoring for sure.
Yeah, and it's not just the media buyer that's getting disrupted, it's also within Google now. Like it used to be when we had, there's different specs for ads. So have different formats if it's on mobile, if it's on a website. You used to have to go to your creative team and get that ad cut 5 different ways. Google now, well, they have AI tools that do it for you. You just throw in one version. It's not perfect, but it's pretty damn good. But I think Trade Desk could have an opportunity because I was thinking about this yesterday. It all depends where the ad dollars are flowing, and like the real estate on which you can advertise on the internet, I think is going to change a lot with agentic AI and Gen AI. So like even just like banner ads on websites or like the typical things you see as you're experiencing things on the internet, as all that stuff sort of folds into these Gen AI experiences, um, what is the ad like? Does Trade Desk have an opportunity to build a product there? And I was on this, it's Tech Week in New York, and I was on a panel yesterday, and we were talking about that. Like, are company websites even going to matter in the future, or is it going to matter more that you have a structured database of information that can pull into another platform? So that you know, your real estate as a brand is all the data you have input on the internet for these tools to pull in when someone asks. And that changes what ads look like, where they're purchased, where they're bought. And so maybe, you know, if that kind of moves things, spreads things outside of the Meta ecosystem, that could benefit Trade Desk. But that, like, Trade Desk was built on like display advertising on the internet. And it's like that seems to be shifting, although it remains to be seen how quickly that'll happen.
Well, yeah, I mean, you're right. I mean, Trade Desk, I always call them the Switzerland of ad tech because they just do a lot of everything outside the walled gardens. That's the Swiss. Their hand is always in everything. So I think that like there's a world like it's not hyper bearish um on Trade Desk. Like it's not like I want to sound like the Grinch because I own it clearly, but like the reason like I own Trade Desk still and bought it when it was like going through that massive headache 3 months ago is because again, when you have a thesis, like my thesis, I look for names that are going to capitalize on that, and SMBs are going to explode, applications will explode. That means data advertising for it will also explode because people want to sell their product. So this could drive a lot more that tailwind could be greater than the headwind of these AI powered wall gardens. And a lot of times, like the way this works as well is like the more it's like a catch 22. Like these AI powered wall gardens might be really beneficial for Meta, but also like if more advertisers consolidate into Meta, it might cause the cost per acquisition CPA on the platform to also like rise due to the AI driven bidding wars.
Yep.
And when that happens, like brands will look for alternative solutions to they diversify, lower their blended cost of acquisition (CAC), and that's kind of why I think Trade Desk will always be there because you can't just have one AI powered wall garden
Yeah.
because if too many people use one funnel into this one platform, they're just going to be competing with each other and pricing. Like they're not going to control the pricing at all. It's
Yeah.
going to be a bloody bidding war. So that's why I think like Trade Desk will still do well, and I think they're going to be the independent alternative outside the wall gardens, and that might be a massive opportunity. But again, that's why I own it. I keep having these like fears of like, why do I own a pure ad tech name? And I always go back to like, I see the reward versus the risk. I think the reward's greater, but like, it's one of those names where like, I don't think I'll ever. I didn't add to Trade Desk in a long time before that massive dip of 50-60% in a matter of 2 months. And I think even now, this valuation, like I probably won't be adding anytime soon either. It's just one of those names where like
When did you
it's
get
it's
in on
noisy.
that one?
Years ago, like 4 or 5 years ago. I got in
Okay.
pre-AI.
Okay.
So
Whoa,
so yeah,
pre-AI.
pre-AI,
I
yeah.
don't even
So
remember what that was like.
2021, in a way. So I think that, yeah, I mean, it's
Interesting.
I also love founder-led CEOs who just are that leader and that winner, and Jeff Green is one of those CEOs that just I respect a ton, and nobody in the market or Wall Street thought that a pure ad tech player can get the valuation multiple that Trade Desk has, and it has held up for years. But it does because Jeff Green has proven the ability to constantly innovate and get in front of any headwind in the space. So I have confidence in him that he'll get ahead of this AI headwind potentially, and putting my faith in that.
Yeah. I mean, there's also the connected TV part, which I think
Hmm.
they're innovating in, but and that's, you know, televisions, tablets outside the house that's not like necessarily internet search, pure entertainment,
Yeah.
linking digital ads to those. So that's, I think that's interesting too because that's kind of outside of Facebook's walled garden.
For sure, like Meta is all short form AI ads, 100%. So like the CTV angle that you're talking about, that's been the massive tailwind for Trade Desk, and big advertisers like they look for reach in premium environments like the Hulu's, Disney's, NBC's, I mean the Peacocks, like all that jazz. Like linear TV is dead. Like I don't care if anyone says otherwise, they have been living under a rock. Like it's just dying, and I think that's CTV is the massive tailwind for them. And also, a lot of people aren't talking about the audio angle. I think
Mm,
advertise like they're just getting to the Spotify lane as well. And I think
okay.
that's the tailwind that's underappreciated. But yeah, I mean, again, the conversation that Katie and I are having, like this is why fundamentals are important, but they're not the whole thing. Same with technicals, because the technology is moving so quickly that you have to have these kind of dialogues internally or with your buddies or whoever it might be, because it's really important to stress test your initial thesis, because things are moving so quickly that theses will be cracking a lot sooner than people realize. And it's really important to get ahead of it and make sure you are fully aware of the sandbox of risk when you own a holding. And this conversation, like I think we've covered a lot of the majority of like what's the sandbox of risk of owning an ad tech player
Yeah.
right now. And I think it's important to have those conversations.
Yeah, you also made me think too. Like, I read the advertising marketing tech trades because that's the industry I operate in when I'm not doing the show. But I also wonder, like, yeah, I should be reading trades across other areas I'm interested in because it gives you that layer beyond just the financials of like how their business actually works, their customers. You don't get that sometimes with pure financial news. And I don't really do that a lot where I don't read like energy trades or things like that. Do you consume that type of content, Chai, when you're doing research on these companies?
Yeah, I mean, I do and I don't. I think my style is slightly different because the way I like my rule book for like really digging into companies is like a lot of people will just buy the tickers and like buy what the hottest sentiment is and like what the FOMO trade is on FinTwit, etc. Like for me, like I go into the lab. You guys hear me talk about it all the time. I go into the lab, the echo chamber, and I don't follow the echo chamber of headlines and the FOMO on FinTwit. Like I try to find the themes that I'm really bullish on, and the way I find those themes is but I read a lot of scholarly research notes
Yeah.
on where things are trending towards. I don't care what anyone says. Like ARC has really good research.
Oh
I
yeah,
think
amazing.
maybe the portfolio management isn't people's taste or like their inability to pivot, but their primary research is incredible.
Yeah.
So like their kind of research, I consider that scholar papers, even though people might think, "Oh, dude, you're an idiot." Like it's Kathy
They're
Wood. No,
they're
I think it's
they're very
impressive.
academic and well like yeah, they're sourcing very legit sources. I agree. Their content's phenomenal.
It's phenomenal. And like so I use that. I look at channel checks on the sell side research. I look at what the clear winners of these themes they're writing we're talking about on like these conferences. Like I think a lot of people underestimate how important like C-suite conversations are on these conferences. Like when they aren't dead center on an earnings call or in front of their shareholders, they're a lot more open than people anticipate. Like when a CTO goes to talk at some tech conference, like it's Tech Week in New York, like there's could be a lot of gems
Yeah.
released in like fireside chat that he wouldn't be able to talk about in an earnings call because it's not his show, it's the CEO show, and the CEO wants to control the narrative. Where CTO, it's all he could care less about the politics of running a publicly traded company. He cares about the tech and where it's heading towards. So the fireside chats on these conferences from the CTOs, even the COOs, it's incredible. Like you get
Yeah.
so much knowledge. Like it's like a lot of these semantic layers where you just
Podcast even, like,
yeah, podcasts too. Yeah,
you're
100%.
so right though, because like I've worked in corp comms, like you the IR team, comms team, way less involved if it's like the CTO, like, hey, I'm gonna be on this panel about like agentic AI. Like, yeah, good, whatever, just don't say anything proprietary. But if it's a CEO going on a finance, it's like, don't say this, don't say that. They're very boxed in. That's why you get the cookie cutter. But if
Mhm.
it's somebody like a subject matter expert speaking in their lane, that oversight is less so there. They know what they can and can't say, but they will say more.
No, 100%. I mean, that's a lot of people don't think that way. They think, "Oh, I just want the captain of the ship. That's what I care about. That's it." No, captain of the ship. I talk to a lot of CEOs. They're not like I talk to them privately. They don't sound as as clean as you'd think they would sound
No.
in the public forums, and there's a reason for that. Like they're trained
Yeah.
to sound a certain way, communicate a certain way. It's not as authentic as people anticipate. Carp is very authentic. I'm not saying him,
Yeah.
but like majority
He's
of
an
people aren't. Yeah,
outlier.
they're scripted. They're scripted actors in a way. They are actors, like in a way. It's
It's
weird to say,
acting. They
but they
have
are.
lines. They have, yeah, it's all rehearsed. They don't veer. But they live in a world where one wrong word. I mean, you just
Yeah.
can't. Um, let's hop back over to Hims real quick because it looks like they're popping even more. They're up 17%. I don't know if you can pull up the chart of those guys. I think people are very excited about their European expansion. A lot of bald people in Ireland, Germany, and other nations rejoicing at the new solution coming their way. Of course, they also have like general men's health, and also the company's called Hims and Hers. They got girl stuff too. I don't know what that stuff is. I'm also not as familiar with I'm not as familiar with their
Stop,
products.
stop, yeah, stop bragging,
I
Katie.
know. I'm like, yeah, I'm like, I don't, I'm not balding, so neither are you though, Shy. I was thinking actually yesterday I saw Tom Lee on CNBC, and I feel like you guys could have like a hair off.
Yeah, we have, yeah,
Very
right.
similar, very similar. Other Tom's is like a different, like I'm like, that's not real. Like it's just like not real. But yeah, there we go. Hims. I mean, a lot of retail traders love Hims. So hopefully you got, yep, look at that. Look at that. That's not even like it's better when he's on set. I don't know what it is. Whatever they're doing in hair and makeup. Like LA looks gel, blow dryer. He looks like Vinny from Jersey Shore sometimes. They really push it up. But you know what? If you got it, flaunt it. You could do that kind of thing, Shy, with the little
I mean, nobody touches, like, first off, I walk into the green room when I go on TV. I'm like never touched. Everyone else gets
what?
touched
You
for
gotta
some
get
reason. Like,
powder.
I gotta
They
get
don't
powdered. I think they're like, you're young enough, like you don't need the little massage on like the what do you look like? I'm like, you have no idea.
You
I
get the
do.
powder. When Howard Linden recorded here one time, he like wanted my powder. But like obviously doesn't have a lot of experience applying makeup. So he's like throwing it all over his face and he's about to go on camera and he just got white powder all over his shirt. I was like, you cannot go on camera like that. He's like, what? Um, but the powder's like I wear powder. Powder's a game changer. I'll send you the powder I have. It's good. You're fine where you are, but on like a hot TV set, like you got to get the powder.
Well, no, I got first off, I had to go to Sephora a week ago because my fiance said I need to get some coloring for my engagement shoots.
Oh,
Apparently I have dark eyes, which again I didn't sleep much last night, so I definitely have something over here right now. But she was like,
wait, so
I want that
concealer?
covered. Something she put something over here that matches my tone. I don't know
What
what it
brand
is,
was
but
it?
I don't even remember what the
This
brand
is so
is. It was a
exciting.
nightmare of experience though. I would never go in
Oh,
Sephora
I
again.
love
It's
Sephora.
There's so many products and so many my whole hand was filled with
I
different shades. It was like the worst thing. It
Whenever I
was
go in
annoying.
Sephora, I'm like, man, capitalism, baby. Like that is the power of the female consumer. Like it is, and it's so expensive. Like you will put
Oh my
5 things
god.
in the cart and it's like $400.
200 bucks.
And I'm like,
Yeah.
what the? And the margins on that stuff. Like my friend works in beauty and she's telling me like some of these products, it costs less than $1 to make them and they sell it for $40. I'm like, I got to dig into that a little bit more. They all have their other like supply chain issues and stuff, but the margins on makeup are insane. Like
And it's also
nice little business.
it's recession proof.
Yeah.
That's the thing because like when people like are going through tough times, like they don't pay up for the cosmetic solutions, the fancy
Yep.
gyms. Like the cheaper way is to feel good is the makeup. So
Yep.
it's recession proof.
And again, that's one of those things where if you're not in it, you don't see it, you wouldn't appreciate it. But you walk into a Sephora and you're like, money is moving in here right now. Ulta also, and that's a whole other topic. But they serve like they have different products, they serve different audiences, they own their own niches. Like there's all this like beauty industrial complex stuff going on, which is actually fascinating, even if you don't personally wear makeup like me and Shy. Um, let's take one more look at what's going in the market. Of course, we're all waiting for CrowdStrike earnings, and we'll watch that closely and let you guys know how that goes tomorrow. But again, Constellation, big meta deal up 15%. Hims, European expansion. Ford had a good sales increase in May, despite tariffs, so that's a little surprising. But on the whole, things are relatively peaceful for now. Things could change. Shy, any final parting words before we head into the day?
Enjoy the quiet. I think maybe first off, summer months are very quiet. Maybe it's June. I
Yeah.
will say the East versus West pettiness is having little impact on the markets now. Like it doesn't matter what they're saying, that it's not really moving the market too much. So I think we're in this chill period. I think it's beginning, and take advantage of it. Go outside, touch grass,
Yeah.
do the research that we talk about all the time. Like this is a time when the market's like not moving too much. Like
Yep.
this is when you kind of invest in that
Go to the
time.
lab.
Yeah, go to the lab. Like once the August misery comes, that's when you typically people from run the September pullback is in August. You'll be prepared.
Yeah.
But yeah,
And if you guys have any pockets you want us to go to the lab, like tell us. Tell us on X, on whatever, like what is like a weird industry? Like I think it's good when there's not all this like weird political stuff going on. We can sort of geek out.
100%.
We'll
Yeah,
have to pick
finally
some.
my macro hat's off. But please don't choose fintech, guys, because fintech is like one of the more. It's tomato. Like it is holy moly. Like it's really
Well, we're
hard
gonna
to
have to
talk
talk
about
about
that
the
many
Chime
names.
IPO soon because
Oh
that's
yeah.
going up. But yeah, tell us the weird stuff you want to learn about. But we'll be back tomorrow right here at 9 a.m. as always, and we'll see you guys later on.